Good morning, everyone. I'm not sure how. I hope you had a great weekend. I'm not sure how you'll be working off last week and how things were doing for your portfolio. Things are a little bit volatile, and actually, all three indexes were down previous week with the fear of Delta variances, and also looking forward to the FOMC meeting with things with the unemployment rate and payroll situation. They're kind of looking into how possibility of asset tapering. So just want to show you the graph really quick with the week. Give you some insight, right? So the Dow Jones Industrial Average obviously were down about 300 points from Monday. Going down for the week. It's 300 points, and you can see that, of course, while there was some bounce back in the early February P markets, and the market after that have bad news and keep going down, and then you kind of get a rebounding again in the Wednesday, and then you get another not so good news coming up on Thursday, driving the market down again, and then you rebounded. So you can see if during the week is pretty much, if you're doing day trade, you may have possibility of making money because it was kind of going up at the high points and you slip it all the way back. So it's just a matter of how, what that means by volatility, and also you have to look at the market very closely to buy and sell, or just set up the market price where you're happy with either your options or your actual physical stock purchase of the profit percentage, and you would just walk from the market. I mean, the other one, telling you the messages maybe a little bit, when you look at it in perspective, it's slightly different, but overall, you look at Monday, it was kind of different timeline, but then you also going up and you slip it back, at the later of the Monday, for the Nasdaq, and then you can see Tuesday you also have went up, but the timing of it is a little different. This is actually P market very early of the Tuesday market, and then this one that actually happened later of the market, and then but then you all end up in Wednesday at a lower territory, and then the Thursday during the day, you can see it's also going up in an uptrend on both, and then you slip back Thursday. And then Thursday and Friday pattern is a little bit similar, except that last it was have a little bit more dip during the time of the later sections. And then you can see the S&P 500 share similar story. It only dropped about 30 points from Monday opening to the end of the week, so wasn't a lot very material. But you can see the trend and pretty similar. You can see this mountain. It has a mountain on the S&P 500. You can see the slip, and then you can see the pattern off from high points slipping back on a Thursday. So from a perspective of movement, trend on all three major indexes were kind of similar pattern. They all end up lower. So I'll give you a little bit of detail of what happened. This is a little bit more summarized at higher level. For that I'm giving you, but then on the later day give a little more detail of the stock what's happening. But shares Alibaba slump on Monday after Financial Times report that Beijing is planning to break up Alipay, the hugely popular payment app owned by its financial affiliate Ant Group. Again, Alibaba have been very strong when at the time when Ant Group were planning to go up to as part of the IPO. The share Alibaba at that time was as high as over $300. So right now the market has been seen pretty weak. Hong Kong market is about opening down $3, $3.50. Not a lot of major impact from the real estate. We'll get into that in more details. And it actually dropping $152 on Alibaba at the moment in Hong Kong's Hang Seng Index. The hugely and then COVID-19 case among U.S. children also raised about 240% since July. American Academy of Pediatrics data show consumer price rose 5.3% in the year ending in August, a tap below the 5.4 increase in June and July. So which pretty consistent that Powell was saying the inflation transitionary. We've seen it last a period of time around 5%. So this substantial increase has conflict with school reopening. Experts say vaccine mandate may be the only key in classes viable. I don't know. As far as I know, school pretty much a lot of students already return to normal online classes due to budget constraint per se. And casino stock also such as Wayne dropped more than 20%. If you look at Wayne, it was at $108 high point, and you drop it to $83. So this one I actually will look at you to put it in a watch list, maybe a potential buying, if it drop enough, and that was also because the reason that they lost the license in the upcoming renewal in Macau. So they actually built a lot of hotels and new stuff around Macau, and thinking that continued growth of the casino business will really bring in a lot of revenues. But then if they don't get a license, there will be huge damage. So that's why the share was really heating up. You can look at these casino stock and compare. I mean, MGM probably will be okay because they still have the operation and a license possibly, but Wayne, and there's one other one, I forgot the name, but not Caesars, that also are running the same risk, that have dropped about 15% to 20% just a week. So again, this is coming into play why the collaboration between U.S. government and Chinese government are very important. This is go beyond than just the discussion of tariffs. For those remember last year, that was what Trump went during his administration. The starting point of talking about tariffs is all about money, but now you get into a little bit more deeper than that. And also Huawei, it really depends on the negotiation, what happened between, if there any, right, between U.S. government and Chinese government about releasing the high executive to go back home to China. So and then we have another new update on the property, real estate properties. One of the stock Hyundai, I think Grand English, which has been very bad healing right now. This stock actually, of this company, have been having the issues probably in 3 years timeline already. So it shouldn't be very surprising. But right now, we're really looking forward to see if the Chinese government will do any rescue plan, or if not, then how does it impact if the industry only real estate law. And Biden advocated thousands of vaccine but pushed back by FDA as lack of evidence improving it. And that's actually driving the vaccine stock down this week, particularly in Pfizer. Pfizer, when they announced the earnings, if you remember properly, roughly 2 weeks timeline, it was pushing as high as $51 and now dropped back to $43. So just gives you some perspective. But I still have the price of stock as at this time. I have a break even, but I still hold up to it. And on Thursday, markets were mixed. U.S. real estate and expected increase in August. Sales were driven by a surge in online purchase, with offset a continued decline in auto dealership. But sales at auto dealership tumbled 3.6% after decline 4.6% in July. So you can see some auto stock like Ford, GM, these type of stock, and Tesla. Tesla's exception. They were actually went high, increased to $750 this week. But a lot of this automotive industry stock, if you look at China for a month, is actually gone lower because of the shortage of chips plus other problems. But the demand of the the automobiles. An ongoing global shortage of microchip forcing automobile production. Sales in electronic appliances fell 3.1%, excluding automobile, gasoline, building material, and food service, which retail sales rebound 2.5% last month after downward revised 1.9 decrease in July. On the jobs claim, it rose 20,000 to a seasonally at just 332,000 for the week ended September 11. A third report from the Philadelphia Federal Reserve showed in business activity index jumped to reading of 30.7 in September from 19.4 in August. So there were kind of mixed news driving the market. In Wednesday and Thursday timeline, the market have been going up and they push it back, and you can see the volatility there. If you look at the chart again, right, which is these index behavior, you can see that it was going up and then it gone back down, right, and then gone up a little bit again. And you can see Wednesday the news expectation of driving the market, and it was dipping and then you kind of rebound back, right? So in labor statistic, And JP Morgan on Wednesday, economists at JP Morgan again trimmed the third quarter GDP growth forecast to 5% annualized rate from 7% pace. This seems to be pretty significant if you think about 2% cut from the outlook, right? And then we only a few months more to go in US or actually the rest of the world. I'm not sure if China still retained it and GDP with 8% growth. We'll see if they're going to be able to make it. And Dutch Bros jumped another 30% second day trading on New York Stock Exchange, symbol BROS. It listed with issue price $23 and trade around $49 late in the section Thursday. New month Gold Crop, NEM, MLM, and Freeport McMoRan Copper and Gold FCX were the worst performing in material with down 6% on Thursday. Friday market continued to be lower overall. It was a pretty weak, pretty bad week. The market has high volatility with West now. If you look at the West number VIX, it happened in a period of time dropped to 15, and you could say 15 and 17 range, and now jump over 20. That is not a good indication. If you continue to jump the West back to 25 this week, then I'm telling you, that means the outlook of prospect of buying versus selling, there's a lot more selling pressure in the market, maybe profit taking, or there will be adjustment. Just remember that. We maintain our confidence in the stronger strength with consumer and fully expect second growth for retail sale and strong holiday season retail. NRF President Matthew Shai said. U.S. future down at the moment. You can look at the Dow Jones is actually down more than 180 points. I actually see it like 278 points. Nasdaq was down about 65 points now, which is double than the early sections when the Asian market just opened an hour ago. At the Asian market, Hang Seng Index is down 2.7%, which I get worse now. It's down 3.6% at the moment, which is about 850 points, and actually it was down even more than that to 1,000 points. SSE compensate, however, and Samsung compensate, I'm still seeing a positive at the moment, and so does the Nikkei index. The stock, remember 2 weeks ago, I did mention about it because last week I didn't do the video. SelectQuote SLQT has climbed close to $15 now. It was a start to hit 60% in one day, that down to $7.80, which I was recommending my friends to buy. So a couple of friends did buy them, and I myself bought a little. It was jumping. I saw around 11.75, 11.50. I told my friend if they're a little more conservative, but at that point, so it jumped about 30%. And then it was still going up, so I said you can buy back around 11. You keep going up, so $12. So I was telling people to buy maybe a $12 range. It could still make up to 14, probably 2 or 12, still a good profit. But now it's at about $15. So if you buy at $12, you'll make 20% on that. And this week, there will be an FOMC meeting. I'm projecting to start possibly going down further. Just like you look at the indication of VATs, you look at the futures market at the moment, you look at the Asian market, that seems to be, okay, but the Hang Seng Hong Kong stock market really driving poorly and really have a huge pullback. And what was the driver? Is really, it was announced that, I think Friday timeline probably announced, or late Friday, announced that the property, one of the largest property, which actually, funny enough, that 2 or 3 weeks ago, if you listen to my video, it was financed. I was told that the news was saying in China, sources saying that Bank of China were refinancing the property, the real estate company. They actually sell another real estate / gaming, online gaming, I think that's the name, and then also another one, because they broke out in different sectors of this real estate online game, real estate, I don't know, grocery or something, and then they actually sold part of these shares to Tencent for getting cash of, I think it's 50 billion yuan. And then they were also doing it with Alibaba, I believe. And they actually also cashed out another 50 billion yuan, and then with refinancing from Bank of China, so you thought they would have some cash flow to really meet the debt or do whatever they need, but they actually have a 3,000 billion, really the debt that got accumulated over 3 years plus. You can see they have been very mismanaged. There will be very leadership mismanagement, the executive mismanaging the company, over leverage, and also the environment for whatever was the reason that people really decide to keep borrowing money to them. So they have the cash, but then today, they really come to realization that, kind of get to the bubble, and they really will not be able to meet their obligations. Now, a lot of houses that they continue to build, and it's not completed yet at this point. So we don't know how much it's going to impact the other real estate, other in sector. If you think about it, because you build a house, you got to borrow money a lot from the supplier, right? He has the terms and conditions. It doesn't pay and deal immediately for the cash. Like if you give me $1 billion worth of material, I don't pay you. Maybe I'll pay you 1/3, and then some of them may be collateral per agreement. There will be 15 days or 30 days, probably payment term. So wherever there's 1 month lag of material that I borrow from you. So now there's some challenges there. At this point, I couldn't tell you what the impacts are, and still assessing that and see if it's going to impact not just the real estate stock itself and the industry in China, but it would be other sectors as well. Bank definitely get impacted, no question about that. But then would that be also have some impact in the American, US or Europe stock exchange as well? Because there's some funds actually did have the bonds or collateral or securities of this company because they're pretty good, giving good interest to them. Now the underlying asset doesn't mean it doesn't worth anything anymore if they really let the bankruptcy, which means no government, Chinese government bailout or rescue, which at this point looks like that is the case. If they are going to save, they're not saving the company by borrowing money, but probably requesting restructuring in some kind with support certain things that are going to helping out and chiming in with some extra money, like that people who actually want to buy a house in real estate in China is exceptionally expensive. Chinese government may help those people who are really spending money, really helping out to own their own house and have their home. So I really have a big sympathy about that, because this was a problem before, but then the Chinese government chimed in and basically fix some of these, housing that were in transit building and never complete. This is really one of the biggest challenges that's out there now. So I will keep you stay tuned on that one, and for now until end of the next month, which again October will be another challenging month after FOMC saying as the table with more clear picture what's going on, but it will be critical to see if the market will be at this point at a correction territory, 10 to 20% pullback in the next 6 weeks, but we have to see. But you do see the market start to really dropping slowly, so they're not crashing, but sometimes, to be honest with you, that is more risk, because if you crash big time, 5% one day, 10% one day, another 5% or 10%, well, you get the crash in 2 days, somebody will take action. What the action means is some people will say this at the dip will buy back and have support point, have volume increases on the purchase side, right? But then if you are slowly dipping it, that means people may be slowly selling their asset and the portfolio or what they earn, what they're worth, to take profit taking, or maybe some people even take a loss. Then it's very difficult to assess and understand when it's going to be the bottom as a dip to buy back. Because every day you're just growing slowly, little by little, right? So I will stay tuned for that. But what I have provided to you for the stock that just bear in mind in 3 categories, really Chinese stock. Chinese stock got bit up very poorly. If the Chinese support and the company continue to make money, and this real estate stock not going to impact these as this giant stock that I recommended, then they will actually be still going to be upward trend. The second piece is obviously variant Delta is risk, but people will acknowledge that is just the way of life. A lot of companies actually make the employees go to work now. You can't work from home anymore. People increase the vaccination, the rate. So then you understand that this is the future. So people are still going to travel. The next holiday, big holiday, will be Thanksgiving, Christmas for America, and then people probably like myself would like to travel as well back to China as well, and so you can see that more travel going on. Especially with hopefully the rules will be get lighten up a bit when the more the cases going down. So these stock currently got beat up right now with the CCL, NCLH, Royal Caribbean, United Airlines, American Airlines, all these trip. I really see that if you're holding in the future, I mean they want to get beat up. They already the price already way lower the pre-pandemic, so it would gone up. And then bowling still again. I have the same rationale with you. Why buying that? Disney, the more movie coming up. You see the stock now. When I told you to buy, it was at $163 at low end to 175. Today is 183. I really think this stock will hit $200 and upward. They do. I mean, I don't think they're overvalued on this stock in this case. And then microprocessing chips, if you own it now, you maybe can hold on to longer till early next year to sell them, because chips is still shortage, so the stock is not going to crash yet. But eventually you will have to have a thinking a mindset, understand you may go back down to 25% adjustment, just like Zoom. Think about it. Right, that's a good example. And then the other thing is vaccine stock, which I would only touch Pfizer because they're not that going up as much as Moderna and BioNTech. I mean, these stocks will crazily go up to over $400 to 300. Yeah, 400, and the other one 402. So I wouldn't really buy them. I can only see them will eventually come back down to half of this valuation, but it's not now again, huh? So these are the things you need to think about. And then Apple, iPhone 13, how will the sales will impact their stock value? Google seems to be still in very well position. Microsoft, because Windows 11 rollout still very strong, and Xbox, and then Amazon. You really think about it. They say the online sales still strong, and maybe in Thanksgiving coming up, people are gonna order online and will buy Christmas gift. So these stocks need to be closely watched, because if they are going down due to overvaluation, they may adjust 10% plus easily, right? I mean, because you see them gone down and come back up 10%, right? In the various in few months, so maybe a quarter, because normally when it be in the seasoning quarter earning, they tend to go back up, and then you wait for the 2 months for nothing, doing nothing, they are going down. I hope this video can help you and you like it. Thank you very much.